So you have income, you have assets, credit, monthly salary, your hourly wages, things of that nature. Credit, that can sometimes be the big question mark in today's environment. Luckily, people have become more credit conscious over the most recent 4 to 5 years, I would say. It doesn't always project very well into the FICO model that we use in the mortgage world, but it does give us just a little bit of an insight, or gives us a snapshot of what is out there, what's available. From an income standpoint, that's pretty self-explanatory. What are you making for income? If you're a W-2 employee, if you are someone who's self-employed, we can analyze that and go through it. I personally have 27 years in the business, done lots of self-employed loans over that many years. There are different avenues, even if you've just been self-employed for 1 year, but it requires a little bit more down payment, things of that nature. And then, assets, cash that you have in the bank, your stocks, your investment accounts, your 401ks, friends and family, people that can help you out as far as for the down payment, things of that nature.